Welcome to Taking Stock. I'm Amanda Lang. Coming up on the show, Canada's flirting with a recession, but is it serious? And ag is big business in Canada, but how can it be even bigger? Plus, is China a viable plan B for Canadian exports? That's all ahead. First, for the week that was in business, it's time for the briefs. The province of Quebec has declared the Northvolt battery project dead and will write off $270 million it invested in the venture. It's been the subject of speculation for months after Northvolt declared bankruptcy in Sweden in March. Quebec had pledged up to $510 million in the projects with the hopes of creating 3,000 jobs. Food giant Kraft Heinz will split back into two separate companies about 10 years after merging. The combination of powerhouse brands was backed by Warren Buffett and Brazil's 3G Capital in 2015, but failed to create promised growth. It's not clear what, if any, impact the split will have on the company's Canadian operations. The price of gold hit an all-time high this week, above $3,500 US, as global investors seek out a safe haven against inflation and geopolitical risk. Some central banks are adding gold to their holdings and selling U.S. government bonds, a signal that the safety of that U.S. investment is in question. Nestle said it has fired its CEO for what it calls an inappropriate relationship with a subordinate. Laurent Frex denies wrongdoing, but Nestle is denying him any severance all the same. The food and drink giant fired its last CEO a year ago after concerns about Nestle's performance. Canada Revenue Agency has been given an order to create a 100-day plan to fix quality issues at the tax agency. Service delays and access issues at CRA call centers prompted the finance minister to issue the directive. It comes after a scathing report from the federal ombudsman on the quality of service. CRA cut thousands of jobs in the past year. And those are your business briefs. Canada's economy is clearly feeling the effects of ongoing U.S. tariffs, and business confidence is down. So how gloomy is the outlook? Pedro Antunes is chief economist at the Conference Board of Canada. Thanks for being with us, Pedro.
It's a pleasure. Thanks for having me.
So let's start with this question of, is a recession inevitable?
Well, I think we're pretty close to what we call a technical recession, in the sense that we've already heard from Statistics Canada that the second quarter just last week came in quite strongly negative. It was down at an annualized rate of 1.6%. So, when you think about Canada's economic growth, a normal pace of positive growth is around 2%. So we've got a quarter here that came down 1.6% in the second. Plus, we've got a number of indicators that are suggesting that the third quarter is going to be flat at best. We know the labor markets aren't doing well. We've got some indicators on monthly industry basis that are telling us that we may very well be flat or slightly negative in the third quarter. So technically, we're in a recession. I think the pain is already here. We've seen labor markets not create any jobs since the start of the year, really. And we're seeing the pain all across in terms of consumer confidence, being at very low levels. Business confidence down as well. Just all of this uncertainty created by this trade and tariff war.
Yeah, it seemed clear that export was really where we saw the real pain. Business confidence, of course, terrible. You mentioned consumer confidence. It did feel a little bit like domestic demand was holding up. But it's not enough, I guess, to offset all of these other big issues that are the headwinds for our economy.
Yeah, I mean, the big hit to the second quarter, of course, was exports. We, in fact, had a ramp up in exports in the first quarter of the year, as essentially firms were trying to get ahead of the tariffs. The second quarter, though, we're seeing the reality of these tariffs. In fact, a number of industries are going to see exports now well below their normal levels, even before, comparing to before the spike up in the first quarter. So we're going to take a hit from that. The other pieces you alluded to, I mean, business confidence is very low, and that is already having an impact on investment. And in fact, investment in the second quarter was down sharply as well. That's really bad news for our future productive capacity and our future job creation. But you're right, consumer spending, even though consumer confidence is also at very low levels, consumer spending has held up. And, I attribute that a little bit to the fact that wages had finally caught up with inflation. And we have seen with a number of measures, essentially household incomes, real incomes, if you'd like, in other words, incomes above inflation held up. And one of the big factors there, of course, is the carbon tax coming off of inflation, getting those numbers down back to below 2%. So that has been good news for consumers. But I don't know that that's going to last given the uncertainty around jobs.
Fair enough. We've got the Bank of Canada, of course, only a couple of weeks out from a decision. I'm seeing sort of 50-50 on whether they lower rates. And maybe it's because we're seeing things like wages and some other prices remain elevated, and that's inflationary. But would all this add up, as far as you're concerned, to the need for a bit of a rate cut to help stimulate?
Yeah, I do think the bank has been quite prudent. I think they're holding some fodder just in case the economy goes really bad and they do need to lower rates below neutral, let's say. The bank has told us in the past that their neutral rate is pretty much around where they are right now. So we could see another quarter basis point drop in September, especially given the weakness in the economy that we just saw. Whether the bank continues to drop its rates and go below neutral, that'll depend a lot on the state of the economy and whether we do start to see a recession or deeper recession or job losses, things that are really painful for consumers in this country. But I think the other piece that's really important here is even as the bank has lowered rates over the last year or so, when we look at the market rates that consumers pay that are mostly based on bond yields, 3-year bond yields and 5-year bond yields, those haven't come down a whole lot. And we do know that there's an awful lot of households that are turning over their mortgages, that are renewing their mortgages from very low rates that they got in 2020 and 2021. And that is still yet to have some pain on households. So that's why I say that, we are seeing some consumer spending holding up right now. But I think we are going to see more pain from essentially higher rates and higher debt financing.
We have to leave it there, Pedro. It's so good to have your thoughts on this.
It's always a pleasure. Thanks for having me.
Pedro Antunes is chief economist at the Conference Board of Canada. Coming up, Canada's agricultural sector is big, but are we missing the opportunity to make it truly world-class? Stay with us.